Mickey Dickey here. I really like a lot of what Dave Ramsey talks about and what he says. And I really love the advice for the most part of what he talks about as far as finding a financial advisor. And that's what I want to focus on here today is to kind of remove some of the misconceptions and ideas of what a financial advisor is and does. But I want you to hear a little bit about what Dave is talking about so that you can get an idea where I'm coming from too.
And they'll tell you exactly what's going on, and you may not have a need to purchase a fund from them right now. But it's okay to start establishing a relationship because they definitely want to be available to you. They make their money based on what you invest with them. So I teach America how to handle their money, and I have a financial advisor. But I don't use them to manage my money. I use them to teach me what's going on, and then I make the decisions with them, financial broker to do investments with, but I make the decisions. And the way I make the decisions is his job is to present options to me, ideas to me, and to teach me something I didn't know before. And so much.
Okay. So what I want to focus on what Dave's talking about here, and I truly like what he talks about, and you need to have a financial advisor who's trying to teach you rather than sell you. And I love that comment that he has, and he's used it on not just these videos but others. And I'm just taking clips out of here. The reason I'm saying this, in the middle video there, he talks about the fact that as wealthy as Dave is, he still uses a financial advisor. It's not that he doesn't understand what's going on. He recognizes the fact that a financial advisor adds something to where he's going and what he's doing. One of the things he says is never invest in something that you do not understand. And I love that thought. It's great in theory. It's not necessarily easy to use all the time. And again, you want to have an advisor who's going to teach you and have an advisor that understands where you're going. So what I want to start with here is that one of the things he talks about is the teaching aspect is a big thing. The neat thing to understand about financial advisors, they are advisors. Their job is to help you put a financial plan together. It's not just about picking a stock. He's not talking about stock pickers to be financial advisors. That's not what he's going at here, and that's not what you should be. The reason he was telling that on the first video, he was talking about some people who don't have a lot of money. Why would you need a financial advisor? Part of it is to help you put together a plan that's going to work for you. So to me, as an advisor, telling you how to find a financial advisor, to start from the beginning. And I've always used this, begin with the end in mind. Beginning with the end in mind is there are different types of financial advisors out there that get paid in different ways. You can have a financial advisor who is paid on fee-based. Fee-based is it's a financial term, but all it means is if you have $100,000 with them and you're paying them 1.5% to manage your money, you pay them $1,500 a year to help you manage your money. It's a fee based upon how much you have with them. Now, the nice thing is that advisors that are that way, you know what you're paying them. You don't have to worry about them trying to sell you something because it's one of the things he's big on. You want a salesman. The financial advisor, the only way they make more money is if they make you more money when they're being paid on a fee base. So they're going to give you suggestions on things that should make you more money because then they get paid more money and everyone wins, okay? The other way advisors get paid is they get paid on commission. Now, Dave is relatively big on having it mutual funds where you pay a commission to an advisor to give you those funds. Now, that's good and bad, and I'll explain that here in a minute, but literally what the commission means is that they only make money when they sell you something. So if they tell you to buy a particular stock, they're getting paid a commission for you to buy that stock. If they're selling you a mutual fund, they're getting paid a commission for you to buy that mutual fund. Now, there is a third one, which is a blend, and there are some investment companies out there that have advisors who are paid on both. I don't want to go into the weeds on it, but you can actually have a program with them where they are paid on a fee base for a portion of your money, and another portion you are paid commission. Now, why is this a good thing? Now, the thing to remember here is that if you have an advisor who's being paid on fee based, that's all they get paid. Now, there are other advisors out there that put together a financial plan and charge you for the financial plan. Personally, I would not work with someone that if all they're charging you a financial plan or they charge you for a financial plan, I think it should be part of what you're doing. So whether you're on a commission basis or whether you're on fee-based or both, like I say, if you have a combination, I think you should be providing a financial plan for your clients for free. That's, again, my opinion. There might be some advisors out there that do it other ways. And again, I'm not begrudging anyone that. I'm saying this is how, if I'm looking for a financial advisor, that's what I'm going to look for. Someone who's going to help me put together a financial plan, whether I'm 20 years old or 50, and help me put it together that's going to help me to get to retire when I want to retire and how I want to retire. Most of you hear me say that, and I'm going to continue to say it. It's the most important thing as far as I'm concerned, as far as you're investing. So the financial plan, in my opinion, should not be a cost for anyone. If someone's asking you to do it, personally, I wouldn't do that. But as far as the fee base is concerned, again, if they're telling you to buy a stock or a mutual fund, mutual funds have different costs inside of them. You can have an A-share mutual fund that has an upfront cost. You can have that same A-share through a financial advisor that's charging a fee-based, and there's no upfront cost to it. So what's the difference? There's also internal costs on some of them, where if you're on fee-based, again, you're getting paid on the $100,000 or however much you have with the advisor. Whether he tells you to buy a mutual fund or a stock, he's getting paid the same fee. Some of the mutual funds pay a different commission. So if I'm a commission advisor, there is an inherent problem with me suggesting a mutual fund that has a higher payout to me. Now, it might be the best mutual fund on the planet, okay? But if I'm telling you to buy it and I make more money because you buy mutual fund A and I get a better commission and I get a better commission every month versus option B and I get less commission on option B and it may not be as good as option A, there's also a reason for me to maybe be selling the commission because I'm making more money on the mutual fund. So that's the negative part for someone that does mutual funds by commission. Now, the majority of us do this the right way. We give the best advice we have. We don't recommend mutual funds or stocks based upon how much commission we make. There are some people out there that do it wrong. And again, the majority of us do it right, so I'm not trying to push that. Now, the reason it's a negative for someone who's doing it on fee-based is that, again, you're paying this person a percentage every year on what you have. If you have someone who's on commission, and let's say you have that $100,000 and you put it into a mutual fund company, you pay the mutual fund company up front to get your money in the mutual funds, you don't pay any more for that advisor to manage that money on the commission side. So if I'm on commissions and I say, okay, here's $100,000 and I put it in a mutual fund company, I get paid up front, I'm not going to get paid anymore on that money. There's something called trails, but I don't want to get into that. But basically, I'm going to make the majority of my money up front, done, your money's in there, and it's invested. Now, as long as I keep your money in that same fund company, I can move it around inside the fund company and I can change the mutual funds, but just stay in the same fund company. And again, I don't want to go in the weeds on that, but I can still manage your portfolio. On the fee-based side of it, the negative part is if you have an advisor who's not actually managing your fund, and all they're doing is putting you into mutual funds and just letting it sit there and not changing it, and not updating it, and not modifying the portfolio, why are you paying them a percentage every year? You might as well just go on with the commission advisor, had them put it into the mutual funds and let it sit there. And some fee-based advisors do that. They just put your money in a mutual fund portfolio, let it run, just like the commission guy does. The only difference is the commission guy is putting all your money in one fund company typically, because that makes it less expensive for you to get into. He's not making as much money down the road, whereas the fee-based guy is making money constantly and should be making adjustments. So when you're looking at an advisor, you need to understand, what am I looking for here? Do I want somebody who's actively managing my account, which would be someone who's fee-based? Or am I looking for somebody where you manage your money, he gives you advice? And typically those kind of advisors, you're going to meet with them usually once a year. They might rebalance the portfolio, but generally speaking, they're going to put your money in a portfolio that's set up, and a lot of times by the company. And once you're done, every year you might rebalance it because you might have had one fund go up a little bit or whatever. But again, there's not a whole lot of changes that go on. They're not going to make an adjustment once a month, once a quarter. Usually it's maybe once a year unless something really big happens. And then even then it's typically a longer term. And like I said, you've got the one that can be fee-based and commissioned. So you can have an advisor that does both. And some of those advisors, what they'll do is if they have somebody, like I've got a client that has a very large position in one stock. He's never going to sell that stock because his capital gains would be huge. He's actually not paying me to manage that money. It's just sitting there in that account. Now he has another account with me that we buy and sell stocks and mutual funds and bonds and stuff consistently, and I call it a trading account. And that he pays me a fee on. Again, you can do both, and again, there's nothing wrong with having all of that. So you just need to understand what you have. The biggest thing for a financial advisor, besides how they get paid, and you need to find out how they get paid when you talk to them, and they should explain it all to you relatively simply, because like I say, most of them are either going to be fee-based or commission, and there's a few companies out there that do both, but most of them are one or the other. There are goods and bads to each. Being commissioned doesn't mean you're less than or better than somebody that's fee-based and vice versa. It's just more about what you're into and what you're wanting to do. The biggest thing of financial advisors, for them to be able to sit down and you have a good rapport with them. That doesn't make, they don't have to be in the business for 90 years to understand the markets. What you want is somebody who's actually going to listen to you, who's going to sit down with you and actually take notes on what you're doing. They will help you put together a budget. And I'm going to have another video out here on how to do a budget the proper way, which the first thing I'm going to tell you on doing a budget, get an advisor. Because what you're wanting is somebody outside of your family unit to be able to give you advice. And again, that doesn't mean you have to take it, but you need to have somebody that you can talk to. Just like what was going on with SVB. You need someone that's either going to call you or you can talk. You can call and go, hey, what's going on, and is this something that you'd be concerned with? One way or the other. And they should be able to answer your questions. And they should actually answer your calls. But the thing you want with the financial advisor the most is someone who's going to sit down and actually listen to what you want to do and help you put together a plan that works for you. If you have somebody who's an advisor who sits down with you and the first word out of their mouth is, you need to take all your money out of your 401k and give it to me, or if you don't have a 401k, I don't want to work with you, or if all you have is $250,000, I don't want to work with you. When my son got into the business and asked me about it, how do you find a client? The most important thing for me with a client is, are you going to listen to me? I'm not saying you have to do what my advice is, but I want you to listen to what I'm saying. It's your money, but listen to me on what we're talking about. I have had some clients who over the years have just gone on their own way, done their own thing, and they come back to me after the fact and they're like, I did this and it hurt me. And I'm like, it could have been nice to know. I could have given you some advice or some thoughts on whether this was a good, bad, or indifferent thing. I had some clients call me when coin was at 60,000 and whether to buy it or not. I got some insight into that. Again, whether they take it or not is a whole other issue. But the financial plan is the most important thing for most of my clients. And it doesn't matter whether you're worth 10 million or whether you're worth $2. Having a budget and a financial plan to me makes all the sense in the world. So that, again, when I say I want you to retire when you want to retire and how you want to retire, I literally mean that. When I sit down with my clients, that's the first thing I ask them. Besides yesterday, when do you want to retire? Because we try to find a way to make it work. And sometimes it's not realistic. I've had conversations with my clients where they're like, okay, I want to retire at 60. I'm 50 right now. This is how much I have. And what I do is I put together a plan and I can show them where their money's at. And if most of it's in a 401k and they're getting a match and they're doing something, I can walk them through that. Which again, one of the questions you need to talk to when you ask a financial advisor is, if they're not telling you to max out your 401k with your match, they're not helping you. If you have a 401k at the employer that you're working for, whether it's your company or it's a company that you're working for, you need to max the match out. Now, whether you're doing more than the match, I don't care, but it's free money. And no matter what advisor you talk to, if they're telling you different, it's wrong. Max out the 401k first. Typically speaking, I'm going to tell you to max out your Roth IRA second. And once you've done those two things for you and your spouse, then we'll talk about other things. Now, some people say I make too much money for a Roth. We can talk about that down the road, but there's ways to do backdoor Roths to get around that. But if the advisor is not willing to sit down and talk to you and explain to you how a financial plan works, what the financial plan is, and how they're going to get you from where you're at to where you want to go, again, not the person you want to be with. They should explain that to you. And not only should they explain it to you, when they meet with you and when they talk to you, they should be talking to you about those plans and those ideas. Like when my clients come in, the first thing I talk about, how's your health? Are there any issues that we need to deal with? Is there any problems that we need to deal with? Is everything going okay with your kids, schooling, housing? Has anything changed in your long-term goals or your plans? Those should be the questions that are being asked by a financial advisor when you first meet and every time you meet and anytime they call. You can't go through all the questions each time you call because we should be calling more often than that. But at least once a year, they should be finding that out because, again, how is the plan going? You should be able to actually pull the plan back up each time and go, okay, we started here, where we're going. But if you don't have the plan, you can't ever back up to it and figure out whether it's going to get you where you want to go. Now, I've got some people that say, oh, I've got so much money, it doesn't matter. Okay, I'm good for you. I still would have a financial advisor to help you make sure that you're doing it right. I had one client call me up. He says, well, I'm not going to leave anything to my kid. Okay. When are you going to die? Because I tell you what, you tell me the date you're going to die, and I'll make sure that we spend every penny that you have so that it's gone by the day you die. Now, for most of us, we don't know when we're going to die. That particular client was worth a couple $1,000,000 and had a child that was an idiot. And I'm like, okay, if you pass, where's this money? It's going to my 3 kids. Okay, great. Do you want this child getting not quite $1 million, but let's say close to $800,000? Are you okay if they just go to Vegas and blow it? Because that's probably what would happen. Okay. And part of my planning is helping people make sure that they have, and again, I don't do wills, I don't do trusts, I don't do those kinds of things. That's not my point. But my job is to make sure you have a will so that you do have a power of attorney, so that you do have a trust if you need it, or if you have the proper life insurance for yourself. And again, I'm not going to go down the rabbit hole in each one of these things, but these are the questions that a good financial advisor is going to talk to you about. Do you have these things and do you need them? Whether you need life insurance today or not is a different story. Some of us do, some of us don't. And again, there's different reasons for life insurance, and I'll have a video coming out on that as well to explain, again, my opinions on it. But what I want to really boil this down to on the financial advisor is sometimes you want an advisor who's going to handle your money, and everyone wants them to do that. And as much as I like to manage my clients' money, it is my job to make sure they understand how I'm managing their money. I want them to understand when I do reviews with them and talk with them, because I have for most of my clients, I have authority to actually invest their money for them. I can sit down and explain to them, listen, we have this stock for this reason. And I can show them the financials and why we're investing in this particular company and where it's going. I love to do that. Mutual funds are a little bit simpler because, as Dave said, relatively simple because you can just say, hey, listen, this mutual fund is a large cap, blue chip, large cap growth fund. Inside of it is all these large cap blue chip stocks, okay? And it's done this for the last 20 years. That's why I'm doing this. If I'm buying individual stocks, I look at it a little bit differently. Every stock has their own issue, and I can show people on an individual stock why I'm doing what I'm doing. So whether I'm teaching people about a mutual fund, or I'm teaching them about an exchange traded fund, or I'm teaching them about life insurance, or whatever I'm teaching them about, he's really right. You need to have an advisor who's teaching you about what's going on. It's not as much about what's going on as far as whether you're making money or not making money. Long-term plans should be for long-term. You can't look at it a short-term basis, and even a year and 2 years is short-term in the scheme of things for a financial plan. One of these videos, there was a gal on there who was complaining that she had an old 401k, and for 10 years it did great. And then all of a sudden a new advisor comes in and she's losing money. The first question should have been asked, she made the comment that she had called the advisor and he wouldn't return her call. That's not acceptable. The other part of it is, if this whole market's going down, that's not necessarily your advisor's fault if your portfolio is going down. So keep that in mind. The idea behind getting rid of an advisor because the market's going up or down isn't the right thing. The question is, do you understand why it's going up or down? If you can't call your advisor and he won't take your call, and he can't explain to you why your portfolio is going up or going down, that's the problem. It's not that it is going up or going down. It's the fact that he doesn't or isn't willing, or she isn't willing to explain to you why it's going up and going down. And that's what Dave's really talking about. You need to be involved. And again, you don't have to buy every stock with your advisor, but you need to be advised, understanding why they're doing what they're doing, and making sure that if they tell you they're going to invest in a certain way, that they are going to invest in that way. I have an investment strategy that I work with most of my clients on, and I lay it out there the way that it is, and I stick with it. So the bigger question is, if I'm not following what I'm saying I'm going to do, why? So that's the other part of an advisor that I look for, is someone who's actually actively managing accounts. For me, now you may not want that. You may want somebody who's, again, more what Dave is talking about, where they put you in a bucket of mutual funds and you set them in there and you let them go. And he's not wrong. Over time, they should do just fine. But if you want somebody who's more actively managed, then you want to look into, are they actually managing it? Because again, as I said before, on the fee-based side of it, if they're not actively managing it, what's the point of paying them to manage your money every year? You might as well just have them put you in a mutual fund that you pay the upfront fee on, and you don't have to mess with it anymore. So that's where I come down to, and I'm going to just break it down really quick. Find an advisor you feel comfortable with, and it doesn't have to come from a friend or a buddy or a cousin or an uncle that's, hey, this guy is just great. No, find somebody you're comfortable with, preferably somebody local that you can sit down with and you can talk to. And sometimes not having them part of the family is a good thing. Sometimes getting out of that nest is a good thing. But find somebody that you're comfortable with. Find somebody who's going to sit down and listen to what you're saying, and is going to give you and help teach you the proper advice to get you from point A to point B. And preferably as a couple. I'm very big on meeting with my clients as couples, and I can't tell you how many times, especially putting a financial budget together, and I'll have a video on budgets here in a minute, just to give a little bit away on that. The way I do budgets for my couples is I have them do a budget worksheet separately. And the reason for that is there are things that I pay for that my wife doesn't know I pay for. Rotate tires, oil changes. And again, I'm not hiding it from her. There's just things that I don't realize on a daily, monthly, weekly basis that we pay for. Getting the dogs groomed. My wife gets her hair cut. And again, I know she does. I just don't know how often. So how do you put that in a budget if you don't know what it is? The problem with doing it together is we have a tendency to kind of group think things. So I help my clients put a budget together. I usually have the two partners do them separately. And then when they come together, we can see what's going on total. Now, I like just writing it down on a piece of paper. Now, the reason I do that is most of them don't know what everything is. Now, some people have budget worksheets. My problem with the budget worksheet is people have a tendency to look at that and just only focus on the budget worksheet. And if there's something on there that we're missing, it's missing it. So not that you can't use a worksheet, I just like to try to write things down. And we start with the budget. So anyway, make sure that they're helping you, they meet with you, they talk to you, and you don't pay them for that. I am not big on paying for somebody to be your financial advisor as a consulting fee or whatever. To me, I think your advisor needs to earn what they're doing. So they meet with you, they talk to you, they help you put together a budget worksheet, they help you put together a financial plan, and then they help you get to that goal, which, I mean, those goals can include 401ks, Roths, IRAs, 529 plan, all sorts of things. But each one of those items they need to help you with and put that plan into place. And they should be willing to do all those kind of things. And if they're willing to do that and they're willing to teach you and explain to you why they're doing it and how they're doing it, then you've probably got a pretty good advisor. Again, it doesn't mean that they're been in the business 50 years or 20 years. Again, maybe not a week. Those are a little bit harder to do. But generally speaking, if they have the basics right and they work with a reputable company, they're going to do fine. Again, I don't want to break things down because they're too much further than that, because you can have somebody that works with a big company and you can have somebody that works on their own but runs the business through a big company. So to me, find somebody that you're comfortable with. And if they start giving you ideas that seem too good to be true, they probably are. When they start talking about returns that are 15, 20, 30% a year, and this is what you're going to make every year, again, that's probably not who you want to be with. You want to be with somebody that's going to be realistically logical in the answers that they're giving. So keep that in mind. Hopefully that's helpful for anyone. If you have any comments on anything else you might have questions on, put them in there. I'll be happy to answer them if I can. And if nothing else, put another video out there. But again, find a financial advisor who's willing to help you retire when you want to retire and how you want to retire. Dickie out.